How many Bitcoins does it take to get some goddamn respect in this town?
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent day today. Bitcoin and cryptocurrencies kind of having a bit of a mixed day. We did have Bitcoin having a quick flash crash sell-off. We were hanging out at around the $48,000 level. We fell all the way to around $45,800. We have had a nice bounce back. Lots of people saying, my goodness, be careful. That could have been the top since we didn't make it to 50K. But I'm going to show you what is actually happening right now in the background. And by the way, congratulations to everybody that's been watching the videos. These hit our levels exactly on both Bitcoin and Ethereum. So if you were able to get those longs in, congratulations. But let's talk about what's actually happening right now, because although some people might be worried about being at the top, thinking that this is the worst time to buy Bitcoin whatsoever, well, I'm going to show you exactly why the price crashed. I'm going to tell you why now is actually potentially one of the best times to be buying Bitcoin. And I'm going to show you what actually happened in the background during this crash, who was selling, who was buying. And let me tell you guys, we are nowhere near the top just yet. I'm actually going to show you two different price projections for this year alone. I'm going to prove to you once again that institutions are in fact accumulating the dips. And if that sounds good to you guys, well, you know what to do. If you're not subscribed, definitely consider it. Today's video is going to be short and sweet. We're going to get right to the point, hopping directly into the charts. If you are not subscribed, well, we do this for the most part every single day. Now, let's just talk about the glaring elephant in the room, which is the fact that Bitcoin has put in its highest weekly candle ever. Yes, this is Bitcoin's biggest weekly candle that it has ever put in the history of its existence. My goodness, is that bullish. Oh, and not to even mention, but having a look at that, we didn't even have a blow off top on this candle. It was a nice, solid candle close. Now, this could have potentially had something to do with why we saw a bit of the sell-off, right? However, the thing that I want to point out here is you can see we were talking about this very, very important critical level at around 45,560, and you could see that we didn't even touch it, but we barely just wicked above it, and we did pull back up. And currently right now, the local VPVR over the past 5 days on Bitcoin CME futures is also holding as our support. So you can see right here, we are sort of hitting a short-term resistance, which was our previous support. So we had the support here, it bounced down here again, it bounced down here again, and once we fell below it, currently it is acting as our resistance. But we are somewhere between that and the VPVR. So I would look for a potential bounce at around the $47,000 level. And the level that we're looking to beat right now is right above the $48,200 level. If we can close above here, nice 4-hour candle, then Bitcoin continues on its merry old way, and we probably put in a new all-time high in the next couple of days. Now, mind-blowing chart. According to Jack Purdy, he says that this is so unbelievably identically close to what happened with Bitcoin in August of 2017. He says, anyone need a refresher for what happened next? Well, that's right, my friends. We went on a massive tear up to the 20K Bitcoin. So we always talk about these dips. We talk about dips for buying. These dips happen all the time. In fact, this wasn't even really that big of a dip. We've seen 20%, 30%, 40% plus crashes in full-on bull markets, right? So this right here was a buy the dip opportunity. Now, on the bearish side, is there still the potential? Well, the one thing is you're seeing this 21 exponential move higher and higher. I do consider this to be one of our bullish retests if we do touch it. And you can see right now we are coming out of the blue box territory, which was the previous top at around 42K. So as of this point, that's telling me that Bitcoin's probably not going to fall any lower than $42,000. So if you're looking for the ultimate bear target and you're looking to long, I don't think we're looking for a reversal just yet. Those are the levels that I would be looking at. Now, looking at whale maps, these are where the big institutions, or at least the whales, are accumulating, right? We don't actually know who the whales are, but there is strong demand that has formed between 46.5 and 48.5K. Consolidation below 46.5 could push all the way down to Elon Musk levels. Now, interestingly enough, if we have a look at 46.5 and we come over here, and we look at the dip, we realize that we actually went to 45.9. So it did go slightly lower, but you can see that these whales that are accumulating at these levels, they're not looking to sell lower. And keep in mind, Elon Musk said that they got the majority of theirs for Tesla at around $33,000, right? So what essentially happened? Well, Loma broke it down right here. You can see you have big players, they got the net, right? You got the little traders, they are putting in their stop losses under the support level, and then they scoop up the dips, right? So this leads us to the conclusion that it was in fact mostly retail traders, small traders, maybe who just recently bought Bitcoin, panic selling as the price started to fall. And we have more evidence of it right here. You can see X Caesar points out in the last 24 hours, new addresses dropped 11.5%, but Bitcoin addresses with over 1,000 Bitcoin increased. Big money is buying the dip while the market gets shaken out, just like it always does, right? And according to Key Young over here at CryptoQuant, he actually says if you're a long-term investor, now is the time to buy the dip. Not financial advice from me, but this is what he's saying. He says, not sure how many corrections would be along the way, but the on-chain indicator says there are enough stable coins in exchanges compared to Bitcoin to get another leg up. And you can actually see down here, he points to all the time that the stable coins are down here in the green. And look, we look for a bounce, whereas when they're in the red, we look for a dip. Well, currently, right now, we did just have that dip, and you can see that we are in the green below again, looking for a bounce on the stable coin ratio. And, you know, going back and seeing what happened, yeah, I would actually say that that's probably what happened. It looks like that dip got bought up, right? So here's the thing. Why did this happen? Well, if we have a look, it could just be funding stress. Now, according to Matthew Dibb, he's from Stack Fund, he said that Bitcoin and cryptos in general were looking a little bit overheated, and the Asian session drop was likely a funding reset needed for the sustained move above 50K. So the average funding rate began climbing at the end of January and surged to multi-month highs in the wake of Tesla's disclosure of Bitcoin investments last Monday. He says this suggests that the recent rally below 40,000 was primarily driven by leverage on derivatives. As such, there was always the risk of a funding reset. The price drop has liquidated over 300 million worth of Bitcoin long positions so far today. According to data source Coin Analyze, that's roughly 30% of the total holdings, which is why if you guys are trading on leverage, you want to use lower leverage. Don't be using these, 15, 20, 30, 100x. I mean, that's literally just asking for something terrible to happen. If you guys don't know how to trade on leverage and you want to learn how to do it safely and responsibly, you can check out my tutorial above. I also have links below in the description, guys. Thousands of dollars in bonuses. Just check the links below. Obviously deposit, you get the bonus. Check that out if you're interested. But, getting back here, having a look at a few things we do need to discuss. So fundamentally, previous bull markets have been characterized by fingerprints of increased miner outflows of Bitcoin. Usually the higher they got, it sort of signaled the top. Currently, right now, even though we heard a lot of the, F2 pool, FUD and all that stuff, we're actually not seeing miners selling as much Bitcoin even at these, these crazy high prices, right? So this is one reason why you could say that we're not at the top just yet. And also Dan Tapiro mentions, keep in mind, he used to be a huge gold bug turned Bitcoin advocate, and he says no mania in Bitcoin yet. During the Dutch tulip craze, tulips traded for 10 times the average artisan's salary. If you don't know what the tulip mania is, just Google it, check it out. We've talked about it before. So average salary for a skilled laborer today is $32,000 approximately. So $32,000, I assume he means annually, multiplied by 10x would put us at a $320,000 Bitcoin. And Bitcoin has at least another 10x utility value than tulips. Be patient, just hodl. And yeah, I mean, we're not at the top just yet. In fact, you might be familiar with Plan B and Willy Woo. They're two on-chain analysts. Now, Willy Woo, he's an expert, and he was talking about whales that are heavily accumulating Bitcoin while retailers are just getting started. And this ties in to what I just said earlier. This indicates that we are still early in the Bitcoin cycle. He says we're seeing this quiet accumulation of even more whales, and we're seeing the very first hints of retail, right? I'm sure just now you're starting to get those phone calls from your friends and your family asking you how to buy Bitcoin. I feel like I missed the boat, but not all of them have taken the plunge just yet. And when retail comes in, you'll see the inventory on spot exchanges increase. But we haven't seen it yet. So we are still early. He says it's mind-blowing how different it is in the length of the accumulation off of exchanges. It's so long and so deep. The amount of whales, which are hodlers of more than 1,000 coins, are exploding in numbers right now. And we've never seen such a sharp climb in that species of holders. So we are seeing the whales get fatter, get bigger, and accumulating. And we're seeing the retail getting shaken out. The average, just a barely, a new trader just getting into the market right now. He goes on to explain that although the cycle may still be in its infancy, he has not seen a bull market like this where we have the institutional interest. This is why you can't compare it to 2017 because it is fundamentally different. And he is saying that he does not believe that Bitcoin will ever dip below $30,000 again. He says some people are saying $22,000. I saw one analyst, I'm not going to name who it is, who said $9,000. Yeah, in your dreams, buddy. You really think Elon Musk and these guys buying at 33 and higher are going to send it to 9K? I don't think so. He says my modeling of the bear floor now is around 30,500, and that's based on the amount of sheer capital that is coming into the markets. Now, in that same conversation, Plan B was also giving his prediction of where we could see Bitcoin go. So we have two different stock to flows. We have the stock to flow to 100K, okay, which was the original, and then we have the one that's 288K. So if 2021 follows 2017, then we're looking at 100K. If it follows 2013, then we're looking at a $288,000 Bitcoin. And either way, you could see that where we are right now is nowhere near these levels yet. I mean, you can clearly see right here. Here's us down here. We haven't even hit the peak of either of these two rallies. So you really think that we came all this way just to get a measly 150% on the previous all-time high? You really think Bitcoin went all the way to 20K, went on a multi-year bear market to only go to 50K 3 years later? I don't think so, my friends. I don't think so. I mean, geez, the third richest man in Mexico just recently changed his bio to Bitcoin as well. The virus is catching on like wildfire. Probably not the greatest analogy based on things in the world right now, but guys, it is happening. Morgan Stanley, one of the biggest investment banks in the US, is reportedly considering investing into Bitcoin. Bloomberg reported that Morgan Stanley's $150 billion investing arm called Counterpoint Global could place Bitcoin into its list of possible bets. We saw it with BNY Mellon. We're seeing it with Morgan Stanley. We saw JP Morgan saying that they're looking into it if the demand is there. And let me tell you guys, this is just getting started. Go back and rewatch my last two videos, the video from yesterday and the video from the day before. They're kind of like a part one and part two of why this rally is not something we've ever seen. In fact, I think, like I said in yesterday's video, that this 4-year cycle could totally be shattered and just blown to pieces because this rally could go on for another couple of years, right? We could see Bitcoin climb sideways and upwards, of course, with the occasional 30%, 40% crash, maybe straight through to 2025. We may not even actually get that bear market, or if we do, we might not see those big dumps like we used to, where we had bear markets with 80%, 60% drawbacks, right? Maybe we only see like a 45 or a 50 or something like that, like a little mini bear within the rally. That is totally possible. Now, having a look at Ethereum, we are back above the heart line. I told you guys we are still we're still going up. Obviously, we've had a bit of a 3-day sort of rejection on this trend. So this could potentially put a little bit of selling pressure for Ethereum to come back down and retest the bottom of this. I am looking for a breakout. If we do, we can get up to about $1,921 for Ethereum before hitting some more resistance. But like I said, guys, if you were following my videos and you had an opportunity to put in those trades, anything below here would have been an excellent opportunity to long. In fact, you can see right here, we had a perfect level of around $1,735. And yes, we did wick below that slightly. Okay, hopefully you didn't have super high leverage. You could have got caught right here by this legacy trend that's been starting ever since December. But if you did, you had a good opportunity and you would still be up right now on the trade. So congratulations. And if you guys are looking for those bonuses, friendly reminder, they are down below in the description. If you want to trade altcoins over on Femex, you could do Polkadot, you could do Cardano, you could do Uniswap. Check that out, $680 bonus below. I do have a tutorial if you don't know how to do it. Check that out, guys. But Elon Musk is now coming out saying if major Dogecoin holders sell most of their coins, it will get my full support. Too much concentration is the only real issue. I will literally pay actual dollars if they void their accounts. Now, interestingly enough, Dogecoin did have a bit of a dip. It fell down to about 6 cents. So was that some guys selling? Well, today we're back above 6 cents again. So looks like even Dogecoin wasn't able to be held down by the dip. Also, guys, talking about DAOmaker, you might be familiar with them. They are an excellent incubator. I've been keeping my eyes on these guys. They've been smashing it out of the ballpark, totally reinventing tokenomics, fair distribution. Well, they now have their VI token listing that is coming out. So be sure to check that out. And if you don't know what VI is, you can come over here. You actually see that they're the first VFAA regulated token sale, which is actually pretty interesting, guys. But essentially, they're offering a portfolio of blockchain-based AI assistants for business and consumers to provide automated services and transactions, making it easier, cheaper, and faster. So obviously, guys, one of the things that, made this stand out to me was the fact that it says on DAOmaker, if you are a holder, you can actually get involved in the strongholder offerings, 250 euros. I don't know what that is in dollars, but it is an advantage of obviously holding the DAO token, which is probably why we've seen it going up in value. So they talk about some of their solutions for tech giants, etc., the token utility, and software beta release as well. They say release for closed testing community members in Q4. So they already have something going for these guys. Check it out if you're interested. And but speaking about a lot of these projects and a lot of these things, there are flavors of the months, flavors of the weeks, right, that come out. And in yesterday's video, I told you a few of them. I think insurance is going to be something to keep your eyes on. Privacy, DeFi, PriFi, whatever they call it. But let's be honest, there has been one class that has not been able to be taken down, and that is NFTs. NFTs have been going buck wild. We saw virtual land selling for $1.5 million, but Charlie Lee mentioned something, and this is controversial, but I want your opinion on it. So he says that the problem with NFTs is that they are non-finite tokens. There is a zero cost to create unlimited number of tokens. Sure, Justin Roiland's NFT is unique and awesome, but what's stopping Matt Groening or Mike Judge or thousands of other artists for creating millions of new NFTs? So unlike NFTs, real world art is not zero cost. It takes effort and time to create that piece. This is effectively proof of work. A famous artist like Picasso can only create thousands of pieces of art in his own timeline. This limitation creates scarcity, which helps keep the value high. NFTs, on the other hand, create artificial scarcity. Because of the near zero cost to create another NFT, the market will eventually be flooded with NFTs from artists trying to cash in on the craze. Supply will overwhelm demand, and the prices will eventually crash. So, just trying to play a little bit of devil's advocate, I wanted to read this to you. What do you guys think about it? I mean, he makes a good point, right? If you want to sell an artist's painting, that artist has to sit there and paint it, and then that's it, right? You can't replicate that. But if you think about NFTs, even though, yes, arguably an artist needs to go into a graphics design program and maybe edit it in Photoshop or something like that, what's stopping anybody else just taking that image, copying it, and just creating another NFT, right, with virtually minimal effort just using gas, making it essentially worthless, right? So it's just something to think about. I've heard a lot of people hopping onto the NFT craze, and I'm not saying that it's not here to stay. I think NFTs are here to stay, especially for things that can be controlled, in video games, skins, items like that. I think NFTs are really good for use with, land ownership and deeds and stuff like that. But as far as collectibles are concerned, that's where it gets a little bit gray. So let me know what you guys think about that. I thought it was an interesting topic to just bring up today. But that is it for me today, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I do this every single day. My name is K-Dub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.